Greetings, everybody. Pleasure to have you all on board today. Today's topic is very interesting, very simple, yet very informative. It is about income items that end up in a gross income category. In a simple terms, that means these are types of income that you or anybody else you know, when it's time for them to prepare their tax returns, may have to report this as part of their potentially taxable income. Meaning you may, depending on circumstances, end up paying taxes on this. So skipping these may create unnecessary headaches with the IRS and other tax authorities. So you want to make sure you include all of these types of incomes in order for you to be compliant with your tax return filings. All right? So I have grouped them down together and I'll cover them each in a summarized but yet in a simplified manner, just for you to be able to utilize it when comes the time. With that being said, let me take you to the first group. In the very first group, as you can see, we have three items listed. We have wages, salaries, tips, and gratuities. Now, the very first group is wages. Of course, wages and salaries really go hand in hand. They're not the same, slight difference. I guess the similarity between the two groups is wages is when you are receiving compensation for work done on an hourly basis. Salary is the similar type of compensation, except here you probably are in a position of some kind of management, or you're holding some kind of a professional position. You're a doctor, maybe an accountant, a consultant, a manager. So typically, instead of providing you with wages, the employer will provide you some kind of a compensation, and that will be in the form of a salary. It's a set amount, and you're established with the salary to work at least 40 hours, if not more, on a weekly basis. So typically there is no overtime involved when you are receiving a payment in the form of a salary. So either way, they are treated in the same way when it comes the time for you to prepare your tax returns. Now, the other category that I spoke about, which was tips and gratuities. Now, not every job will have that, but certain positions that you hold, if you're in a accommodation business, say in a restaurant, in a hotel, you're a driver, you may be receiving some form of compensation as tips. That is usually included with your wages, salaries, on a form W-2. Perhaps you have received that if you've been working at least for a year or two. You may have been familiar already with that type of a form. So look for those items on the form W-2. W stands for worker, I guess, work income. All those items, which are called wages, salaries, and tips, will be grouped together, will be treated in the same fashion. Let me walk you down to the next group of items, if you will. As you can see, the next group is severance pay, supplemental unemployment benefits, we'll just call them unemployment income, and pension distributions, pensions, 401ks, retirement income, so to speak. What is important about these groups? Let's take them one at a time. First thing is severance pay. Now, not everybody will receive a severance pay as a form of a compensation. In essence, what it is, it's compensating you for severing your employment with an employer. Typically, this happens if you work for an employer a number of years, and due to maybe cutbacks, they have to let you go. It's an unfortunate event, but it's not so bad. Eventually, it gives you new opportunities, right? But so what happens is the employer will pay you some kind of a compensation as a result of it. And the way it works out is, say, for every year you worked with the employer, they'll give you a week or 2 weeks worth of compensation, a severance pay, to cut your, position with the company. Whereas with unemployment, that's something you apply typically with your state. In California, that's EDD, Employment Development Department. You'll apply with them and you'll receive some kind of an unemployment compensation. Usually it's not a very significant amount, and it's not intended to replace your employment income. It's much lower in an amount. Nevertheless, it serves as a nice little cushion until you find a comparable salary or position or wage income that you were accustomed to before. As far as the last of the bullet points, which was pension distributions or retirement income, that's typically when you are done working, you already have retired, and you're receiving this type of compensation in form of a pension, 401k distributions, other sources of retirement income. I'm not talking about Social Security yet. We'll talk about that in a moment. So these types of income will eventually end up in your taxable income, but we're not talking about that. We're talking about gross income. Think of as the gross income being this big bucket where you put in all different types of income, and eventually you calculate from that a smaller piece, which is your taxable income. In a future presentation, I'll talk about how to minimize your taxable income, making the gross income a smaller amount, and of course, smaller your taxable income, fewer the dollars in taxes that you'll end up paying as a liability. But stick around, we'll cover that in the near future. Let's go to the next category. The next three items that I've presented together as a bunch are business income, farm income, and partnership income. Now, business income, what is included in a business income? Well, any business that you do as typically a sole proprietor. You're your own boss, so to speak. You can have employees working for you, but you are the only owner of the business. You're a sole prop owner, sole proprietorship owner, a proprietor, however you want to call yourself. All right, so that's your business. Any net profits that you make from that, that's your business income, will become part of the gross income, and eventually you may end up owing some taxes on that. The business income that you receive from a farm, which is the next line, is for the farm income, and that's a separate form that you prepare when you prepare your tax returns. But nevertheless, farm is just another type of a business. Of course, slightly different rules apply for the folks who run a farm versus any other type of business entity. But it works in the same way. Farm income or business income, they both end up on in the bucket of gross income. Now, the last item that I have is a partnership income. I've separated that. Technically, partnership is another form of a business, if you will, but that's where you are in a partnership with one or more individual parties, and you conduct the business as a partnership, and your share of income, if it's an income hopefully, will end up in this bucket called gross income, for which you may be eventually responsible to pay taxes. All right? So without any further ado, let's go to the next bucket, where I'll talk about the group consisting of compensation for services, director fees, notary fees, and jury duty fees. A little bit about each. Okay, so compensation for services, I guess you could do a service business, if you will, and that would be pretty much the same thing as a business income, but you don't have to have a business. You may do some kind of services. Maybe you're really good at painting, maybe you're really good at preparing tax returns, maybe you're really good at consulting, and you get some kind of compensation for some service done. You don't have to establish a business, and just because you completed that service doesn't mean it's tax-free. Technically, it's part of your gross income, so ideally that should be included as part of your gross income. Let me talk about the other three items: director fees, notary fees, and jury duty fees. Now, first things first, director fees. Not everybody is going to be director, and when I say director, I don't mean a movie director, okay? That's typically corporate director's position. If you're on a board of directors of a corporation, you're not an employee of a corporation, so you don't get wages. You're not a shareholder, so you don't get any compensation in a form of, I guess, capital gains or dividend income. So how do you get compensated? For your time and commitment to that position, they oftentimes may give you some kind of a compensation, stipend, director fees. That's what that means. Director fees are a certain type of income that not everybody would be making, but should you be making that, keep in mind that is going to be part of, it's going to enter in that bucket. It's going to be part of that bucket called gross income, which eventually, as I stated, may become part of your taxable income and, create tax liabilities for you. Hopefully not, because there are many ways to reduce that, but that's another discussion for another time. Now, the next type of income that I was referring to, it was called notary fees. And notary fees are specifically fees that only public notaries can charge. So unless you're in that profession, this probably doesn't apply to you, but if you're in the profession of public notary, I guess that's a form of a business itself, if you tend to do it for yourself as a business. But notary fees have separate tax treatment, a different type of tax treatment, which we'll talk about at the future, during a future presentation. But nevertheless, I wanted to include that here in case you're in a business of providing notary services. Maybe you do some other services, and providing notary services is another type of service that you provide in addition to. Maybe you're an accountant, maybe you are an insurance agent, maybe you're a real estate agent, and you also have public notary, license to provide those services. That will be considered as part of your gross income. And lastly, jury duty fees. Now, this is not something that everybody does all the time, but should you be selected as a juror in one of our courts, you'll be compensated. Of course, it's a very small compensation, extremely small amount, but nevertheless, it is part of your gross income. So be in mind, if you ever receive that type of income, do not skip it. They will provide you that documentation which you need to provide to your tax preparer, tax professional, whoever it may be. Perhaps you are it, and you can include that information in preparing your own tax returns. So again, this kind of I group together because these are not items you receive most of the time. Not everybody will have notary fees or jury duty fees or director fees, but in case you have it, be aware of it. They're going to be part of the gross income. Let's go to the next subgroup together. What comes together next is awards, rewards, and prizes. So awards, rewards, and prizes. Are they not the same thing? Well, ideally, it almost sounds like the same thing, but they're not. Awards are something that you receive typically for the amount of time that you contributed before. Maybe you've done a great job at the company you worked for, and maybe it's now 20 years that you work there, or 10 years anniversary, and they would like to present you some kind of an award for performing in an amazing fashion, producing so much benefit for this company, and they give you an award for the years of service or for your contribution to the company. Rewards are something else. Rewards would be a good example of a reward would be you're walking over the park and you notice a notification somewhere. Somebody placed a picture of their lost dog or parakeet or a cat, and there is a reward for those who find it. You happen to be, like Ace Ventura, find that pet, return it to the owner on a timely basis. You receive a reward for returning the beloved animal to its owner. That's a reward. So those are all types of compensation that you receive, not on a regular basis and kind of every so often maybe you may bump into that. Would that be taxable eventually? It could be. Does it end up in a gross income? Absolutely. So do not skip that. So we spoke about awards, rewards, now prizes. Prizes are something that you may win. Maybe you have been, in some kind of a TV show or radio show. You won some type of a prize. Could be monetary, as in cash, or it could be something other than cash. Maybe you won a car, a TV, a washing machine. Those are all forms of compensation, believe it or not. Those will be reported to the IRS by the entity that gives you the prize. So be mindful and look for documentation, paperwork that they will send you so that you can properly include that in your tax returns if in an event you win a prize. So awards, rewards, prizes, they're all part of the gross income, so do not skip it. Okay? Let's see what's coming up next. Interest, dividends, royalties, rents. What do you think when you look into these things called interest, dividends, royalties, rents? Do you work for that income? And ideally, no, you do not. See, with the interest, typically all you do is you have your money work for you, in essence. You give the money to a bank or a private institution, individual. They borrow it, and think of interest that they pay you as a rent for renting the money from you, because they're using it, they're making the best use of it rather than you doing so. So because you're renting them the money for a certain time period, they will have to compensate you for that. That's called interest. So you call that interest income when you receive that. With the dividends, that's a bit different. Rather than lending your money, what you're doing is investing it with a company, typically a corporation. And when you invest your money with a corporation, you don't really have guarantees that you'll get some kind of compensation for that. There are no guarantees. You're taking a risk, but then there is a reward. In the event a corporation does really well, performs fantastically well, you're going to get some fantastic results. And if it doesn't, then tough luck. So what happens is when the corporation is performing really well and it keeps some of its earnings for regular, continuation of business, it may decide to distribute the remaining earnings to its owners, shareholders, stockholders, whatever you want to call that. That distribution is called dividend. So if you receive dividends for investing with companies, dividend will be considered as part of gross income. So do not forget to include that. Now, we spoke about interest, we spoke about dividends. Next item is royalties. Now, what is a royalty income? That's typically an income that you receive for, I'll give you some examples. Let's say you were in some kind of a movie or some advertisement, or you wrote a book, or you wrote music. So every time they run that movie or advertisement clip all over again on TV, every time they play your music, every time they sell your book, you get a percentage of that. That's royalty. That's basically compensation for work that you've done once upon a time, but because they're using your work, you get paid for that. Not a common item, I guess, but if you happen to be in any of those types of situations where you're in a movie, in an advertisement, you wrote music, you wrote books, you wrote articles, and they're using it, they're making some kind of compensation out of that, they have to give you a piece of that. That's royalty. Lastly, the fourth item was rents. Now, this is something you are probably very familiar with. It doesn't have to be rent of an apartment or a house. It could be any type of rent. Some folks are renting their cars, some are renting their bicycles, some are renting their homes, vacation homes, or part of their homes. Either case, you get a rental income from renting anything, literally, equipment, machinery. You can rent your hammer, as far as I'm concerned. Anything goes, as long as there's a willing person to pay for that item or service. So, rental income, among with the interest, dividends, and royalty, is considered as part of gross income. Do not forget to include that. Okay, let's see what's the next group. Now we're talking about gains from a sale of a property. We're talking about gambling winnings and hobby income. They are all three different things, so I'll talk about each of these. Gains from a sale of a property. This means you may have any property. It doesn't have to be real estate, your home or whatnot. Any property. You may have stocks, bonds, your own car, a home, land. You have some sort of a property. Cryptocurrency, nowadays we have a lot of that too, right? You sell it. You sell it for a higher amount than you bought it. Guess what? You have a gain. That is a potential income. That goes in a gross income. When I say potential income, it is income. It just becomes potentially taxable income. Next thing was gambling winnings. Now, that's another different story, right? First of all, don't gamble. But if you do, guess what? Winnings are going to be considered as part of your gross income. Will you pay taxes on those? Well, if you don't have any gambling losses to offset against, then yes, you will. Lastly, hobby income. Now, I hope everybody has some kind of a hobby to keep themselves happy. The difference between a hobby and a business is that the business you conduct with an intent of producing some kind of profit. That's almost like working as a regular job, except you run your own business instead of working for somebody else. With a hobby income, you do it for fun. Maybe you, I don't know, you paint, or you, for fun, provide some guitar lessons. It's not a regular business, but it's your hobby, helping out others. Or you have something else that makes you happy. You do, but turns out people are willing to pay you for that hobby, the product that you produced as a result of doing your hobby. Guess what? That's income, will be part of the gross income, so do not forget to include that. I know it's not a regular business, you're not doing it with an intent of producing profit, but guess what? If you made any income out of your hobby, you will be including that in a gross income. And of course, the last item I'd like to talk about, the group, is going to be this other interesting pile: estate and trust income, alimony income for divorces before 2019, debts forgiven, and embezzled funds. Believe it or not, illegal income is also part of gross income. Let me talk about each of these. So estate and trust income. That's in case you receive any kind of compensation from an estate or a trust. Not everybody is going to receive that, so probably will not apply to you or many people that you know. But should you receive it, it's going to be part of your gross income. As far as the alimony for divorces before 2019, the rules have changed. So divorces 2019 and after, any alimony received, not going to be part of the gross income. So you basically get money free of taxes. But if the divorce was finalized before 2019, that means 2018, 17, 16, etc. An alimony is an amount that one spouse pays to the other spouse, its ex-spouses, so they've divorced. Guess what? That will be considered as income. So before you determine if alimony received is income, it's very, very important to ask yourself a question. When was the divorce finalized? If it's 2019 and after, that income received, not income for you. If the divorce was finalized before 2019, so we're talking about 2018 and years before that, then any alimony received will be income to you without a question. That will be part of the gross income. Now, what's the next item? Debts forgiven. What's debts forgiven? Well, you may have some credit card debts, you may have some car loans or home loans or God knows what other type of loans. And for whatever reason, you are unable to pay the full amount, and bank or the financial institution, after making many attempts, whatever the number of legal attempts are, they finally give up on that. Now, when they give up on that, they don't give it to you as a free gift. They'll send you a form, which I think it's 1099-C, as in cancellation of debt. When a bank or financial institution cancels a debt that you didn't pay, guess what? You're not really free and clear. See, the amount of debt that they canceled will be reported as an income you received. It's as if the income you received, you paid the amount of balance owed. So if you have any debts forgiven, you're going to receive a compensation basically form. It's a Form 1099-C. It will be part of your gross income. Do not forget to include that when you prepare your tax returns. Of course, there are different types of debts forgiven, and there are ways to minimize the tax consequences, but I'll talk about that at a future event. Lastly, embezzled funds or illegal income. I know it's humorous to even mention it in here, but I have to. According to the tax law, it doesn't matter whether you receive your income from a U.S. or any other part of the world, whether it's on planet Earth or intergalactic, whether it's legal or illegal. If you received it, its income must be reported. So the U.S. government, at least the tax authority, the IRS, does not care if the item you received, compensation you received, is from a legal or illegal sources, whether you embezzled it or you earned it, must report it no matter what. Well, folks, that's all for now. What I'd like to do is on my next presentation to talk to you about various items that will be excluded from gross income. What does that mean in simple terms? Well, types of income that you will be receiving but will not end up reporting as a taxable income. You may report it but not be taxed on that, or at least partially not be taxed. So that's good to know those, because in the event you have those types of income, aside from what I've already spoke about, you may be able to minimize your tax bill at the end of the day. But for now, that's all, folks. I look forward to seeing you on my next episode. Bye for now. Take care of yourselves.